Hi, once again, today's Monday, November 18th, 2024. I've just read an article about export-import of machinery in India. I just read the article about CAIR Exim Solutions, the very renowned company in India, I guess. But now let's read an article from U.S. government about machinery export and import business statistics and the current status. Uh, and this article is from usitc.gov, right? United States International Trade Commissions, ITC, right? United States International Trade Commissions. And the title about the expertise area is machinery. Trade Shifts Index 2017 Resources. This article was prepared by Eric Forden. He can be reached at ericforden@usitc.gov. Interactive graphic. To view changing data, hover over or touch the animated graphic below. Imports, exports. Figure MT1 machinery U.S. general imports by several trading partners 2023 to 27, right? Compiled from official statistics of the U.S. Department of Commerce all years. Sector China, Mexico, Germany, Japan, Canada, all others total. Value, so China, right? 27%, Mexico 16%, Germany 10%, Japan 10%, Canada 7%, all others 31%. $1 billion. Source compiled from official statistics of the United Department of Commerce. Change in 2017 from 2016. U.S. total machinery exports increased by $7.8 billion, or 6.1%, to $135.9 billion. U.S. general machinery imports increased by $16.9 billion, or 9.4%, to $196.4 billion. The U.S. total exports of machinery rose by $7.8 billion, 6.1%, in 2017 to $135.9 billion, with some of the largest product group increases driven by higher global investment in semiconductor manufacturing and by strong demand for farm and garden equipment, particularly tractors. The export markets that accounted for the largest increases in exports were South Korea, up $3 billion, or 57%. Japan, up $1.4 billion, or 37%. And Canada, up $844 million, or 4.1%. Table MT1. Table MT1. Machinery, U.S. exports and general imports by selected trading partners 2013 and 2017, right? Item, U.S. exports of domestic merchandise. We'll have South Korea. Foreign exports. Total U.S. exports, domestic and foreign U.S. general imports. The total general imports. Source compiled from official statistics of the U.S. Department of Commerce. Note: import values are based on customs value. Export values are based on the free along ship value. U.S. port of export. Free along ship value, right? FASV. Free along ship value. Free along ship, right? FAS. FAS. Free along ship. Calculations based on unrounded data. Countries shown are those with the largest total U.S. trade, U.S. general imports plus U.S. domestic exports in these products and in the current year. U.S. General imports increased by $16.9 billion or 9.4% in 2017 to $196.4 billion, with the import growth spread widely across product types. Imports increased in 26 of 31 machinery product groups. Overall, import growth reflected growing domestic demand fostered by increases in U.S. consumer spending, business investment, and residential and non-residential construction. The countries that accounted for the largest increases in U.S. imports were China, up $4.6 billion or 9.5%, Germany, up $1.8 billion or 10.5%, and Mexico, up $1.5 billion or 5%. U.S. exports. U.S. domestic exports of machinery substantially increased in two product groups. Semiconductor manufacturing equipment, up $4.7 billion, 28.4% increase, right? Farm and garden machinery and equipment, up $1.1 billion, or a 13.2% increase. South Korea, Taiwan, China, and Japan were responsible for the largest increases in U.S. exports of semiconductor manufacturing equipment in 2017. The increases were driven by new semiconductor manufacturing facilities abroad, as well as significant expansions and retooling of existing facilities, particularly in South Korea, China, and Taiwan. The increase of exports to the East Asia region follows the decade-long trend of increased semiconductor manufacturing activities and strong demand for high-technology intermediate products in the region. Overall, increased equipment investments by so-called foundries and the establishment of new fabrication facilities have fueled demand for U.S. semiconductor manufacturing equipment in Asia. After several years of decline, U.S. domestic exports of farm and garden machinery grew by $1.1 billion, or 13.2% in 2017, mainly in the tractor and tractor parts, irrigation equipment, and combined harvester segments. Over the previous 4 years, record harvests and crop production led to declines in commodity prices and farmer incomes, resulting in a global weakening in demand for farm equipment. Starting in 2017, however, the farm equipment markets in some countries began to recover, leading to increased U.S. exports of such equipment. For example, retail sales in tractors and combines rose 13% in South America in 2017 due to improving economic conditions in Brazil and Argentina. In Western Europe, retail sales of agricultural equipment also increased, with the strongest growth occurring in Germany, Italy, and the United Kingdom. In Canada, the aging of farm equipment fleets has led to some replacement activity, particularly for tractors and combines. U.S. imports. U.S. imports of machinery rose by $16.9 billion, or 9.4% in 2017, driven by increases in U.S. consumer spending, business investment, and residential housing construction. The largest increase was the U.S. imports of semiconductor manufacturing equipment, up by 3.2%, or 28.7%. Miscellaneous machinery up by $2.1 billion, or 17.3%. The household appliances up $1.7 billion, 6.6%. Table MT2 machinery, leading changes in the U.S. exports and imports 2013 to 17. Okay, source compiled from official statistics of the U.S. Department of Commerce. Note, import values are based on customs value. Export values are based on free along ship value. U.S. port of export. Calculations based on unrounded data. The increase in U.S. imports of semiconductor manufacturing equipment was driven by growth in investment by some of the major U.S. semiconductor manufacturers. Intel, for example, increased capital spending by an estimated 25% in 2017. Overall purchases of semiconductor manufacturing equipment by North American manufacturers rose by an estimated 24% to $5.6 billion in 2017. Within the industry, increases in capital spending are being driven by 3D NAND flash memory markets and investment in advanced processing technologies. U.S. imports of household appliances grew by 6.6% in 2017, with the largest increases by value occurring in the vacuum cleaner, washing machine, refrigerator, and stove categories. Overall, increases in U.S. imports of large appliances stemmed from growth in U.S. disposable income and the recovery of the U.S. housing market over the past few years. Stove categories, housing market. During 2013 to 17, for example, housing starts grew at an annualized rate of 6.8%. Wow, that's whopping big number, with the biggest single-year increase occurring in 2013 when housing starts rose by 18.5%. The appreciation of the U.S. dollar during 2013 and 17 also resulted in higher penetration of household appliance imports. By contrast, increases in imports of vacuum cleaners, fans, and other small household appliances have resulted from intense price competition from foreign manufacturers located in low-cost countries. Such competition has in turn led some U.S. companies to relocate production facilities to low-cost jurisdictions, most notably China. Low-cost jurisdictions. That situation has likely driven up U.S. imports, as small appliances manufactured in these U.S.-owned facilities are shipped to the United States. So low-cost jurisdictions, driven up U.S. imports, low-cost jurisdictions, stove industry, driven up U.S. imports, right? Biography, AGCO Inc., right? Bibliography, list of the books that this article referred to, bibliography. So this article was prepared once again by U.S. International Trade Commission. It is based in Washington, D.C., independent reporting. Hey, U.S. ITC, if you need a good English-speaking Korean man like myself, please contact me, right? And I would be your guide, your contact, but your hot button, right? I can take care of any request you make because I'm pure Korean and I work for Korea Telecom KT, the number one carrier and one of the largest corporations in Korea. That means I'm very competent. I am the man for the job, whatever you have there. Please contact me because, hey man, I need to work overseas. I've never worked overseas before, so I'm the man. Thanks for listening, everybody. Have a wonderful Monday. Bye bye. Now I have to hit the sack, right? Is that it?